Alright, so in this video we're going to take a close look at all the Vanguard sector ETFs and really find out the best ones to pair with your core holdings of your portfolio. So if you're using Invest USA, all these investments are going to be in the global and US sector asset class. So there are 11 different stock sectors and there's a ticker for each one. So all of these ETFs were made back in 2004, so it's a little better comparison than State Street. All these ETFs have low expense ratios, so we're going to take a look at them. So VOX is taking care of your communications sector, so you're going to invest in companies like Meta, Google, and Disney. VCR is discretionary. This invests in companies like Amazon, Tesla, and Home Depot. VDE is the energy ETF. You're going to be invested in companies like Exxon and Chevron and ConocoPhillips. VFH is the financial ETF. This ETF is actually the most diversified with 411 holdings. And you're going to own companies like JP Morgan, Visa, and MasterCard. VHT is the healthcare ETF. This holds companies like Eli Lilly, AbbVie, and United Health Group. VIS is the industrial ETF, and you're going to own GE, Caterpillar, and RTX. VAW takes care of the materials sector, and this ETF holds companies like Lind, Newmont, and Sherwin-Williams. VNQ is the real estate ETF. This had the second highest assets under management at over $34 billion, and it was a little bit more expensive than the rest at 0.13%. This ETF also had the highest yield of the bunch at 3.86%. And you're going to own companies like Welltower, Prologis, and American Tower. VDC invests in consumer staple companies. Companies like Walmart, Costco, and P&G are in this ETF. VGT has the most assets under management at $110 billion, and this ETF holds companies like Nvidia, Apple, and Microsoft. VPU takes care of the utilities sector, and you're going to own companies like NextEra Energy, Constellation, and Southern Company. Alright, now let's take a look at all the value and growth metrics. So the communications ETF had the best historical earnings growth, discretionary had the best book value growth, VE is looking like a great value buy with the lowest PE ratio at 14.55, the lowest price to book at 1.73, and the best price to cash flow at 6.95. VFH had the best sales growth at just over 10%. VDC, the consumer staples ETF, had the best price to sales at 1.16, and VPU, the utilities ETF, had the best cash flow growth. Taking a look at historical performance and the Sharpe ratios, VOX had the best one-year returns at 30.35% and the best three-year Sharpe ratio at 1.47. VDE had the best 5-year returns at 30.25 and the best 5-year Sharpe ratio at 0.97. And VGT won the rest with the best 3-year returns at 35.36%, the best 10-year returns at 23.44%, the best 15-year return at 20.13%. So we're going to backtest 5 ETFs today: VOX, VCR, VDE, VIS, and VGT. VFH and VPU also look alright, so we'll give them honorable mentions. So looking back 21 years, investing $500 a month, it really looks like VGT was the clear winner. VCR and VIS, the discretionary and industrial ETFs, were also second and third, just like the State Street video. So the tech ETF really thrived this time because we didn't simulate through the dot-com crash because VGT just wasn't out yet. With $1 million portfolio withdrawing $5,000 a month, VGT was the clear winner once again. Looking closer at the graph, you could see VDE, the energy ETF, was thriving until about 2016. The discretionary and industrial ETFs also came second and third respectively once again, making them a great pairing for your core holdings. So it looks as though the long-term investor should use ETFs like VGT, VCR, and VIS. But there is the argument to use VDE if you are timing the market. It really could have helped your portfolio a decade or so ago. Energy also has the lowest correlation to any of the other ETFs, so it really could be that extra diversification your portfolio needs.